Good morning, traders and investors. It is Monday, September 15th. Hopefully everyone had a great weekend. Ashley and I, my right-hand lady here, we were at the Toronto Money Show. We had a booth there and we presented and we signed and gave away about over 200 books, 400 books. Anyways, a lot of fun. Great to meet a lot of you followers, a lot of members as well to our newsletter. And yeah, great weekend. Anyways, taking a look at the charts, we do have equities trading higher this morning. The NASDAQ up a 0.2%, the S&P 500 up to 0.25%, the Russell up 0.4. So it's a little bit more of a broad market rally today, which is great to see. We kind of want a broad market rally. We're long the markets and we're in striking distance any day, potentially even today, depending how things move, to hit our first target on our new indice trades, and we'll just kind of play it by ear from there. Now, more or less, money's kind of flowing broadly into the stock market. We do have bonds moving up a little bit this morning. They have had a pretty strong pop over the past 2 weeks, and that's a lot of people front-running the news, anticipating a rate cut, and a lot of people will buy into the rumor and then sell the news. So potentially we could see bonds unwind very quickly. Either way, we got the Fed coming out. There's going to be some volatility later in this week. And that might also mean that investors and traders might kind of hold back before they start pushing their chips in to the stock market or pulling them out of various assets until they kind of hear what's going on. So today we are seeing Tesla have a pretty nice move this morning. It has been on a tear the past 2 trading sessions. This morning, let's just zoom out a little bit here. You can see in pre-market down this bottom chart, you can see where it closed on Friday, and it's dramatically higher. It's up at 27.99, 96, way up, right up here. So it is definitely helping lift the Mag 7. Surprisingly, the NASDAQ isn't up more, which means some of the other Mag stocks aren't probably performing all that well. So Tesla's doing, I think, a lot of heavy lifting this morning, and small caps are coming to life. People are moving into the markets, and they're fairly bullish. Now, here's the interesting thing. Money is flowing broad market into small caps. People are willing to take risk. Let's actually take a look at the ARK-K ETF, which is a really good gauge of general aggressive trader sentiment. It has formed a bull flag pattern. And if we zoom in here, you can see it's starting to push higher. It is set to open higher again this morning. So we have money moving into the aggressive stocks. Now let's just zoom out of the big picture here. Obviously the indices are trading near all or at all-time highs this morning. And you can see the aggressive and small cap stocks are nowhere near the highs. And this is the, majority of portfolios are struggling big time. Bonds haven't not recovered, so people holding bonds are way down. And then all these aggressive stocks, which were the hottest at one point, are still down fairly dramatically. Percentage-wise from the peaks, it's still a bloodbath in terms of loss, down 50%. And we did see this go down probably like 75 or more, 80%. Meaning, just to get back to break even, this is a good example of why holding and not having an exit plan is painful. You usually need to make about 500% return from an 80% loss. Pretty big for a drawdown. So, I mean, it's hard enough to make 20% a year. Meanwhile, making 400, 500% just to get to break even. And that's the dangers of the buy and hold and not understanding stage 1, stage 2, complacency stage 4. And it is working its way up, but again, it is not the healthiest market. We might still see this push higher as people are getting aggressive. We're starting to see sentiment, people piling into the growth stocks, and that is sometimes seen as a bearish sign, depending on how that happens. And take a look at our sentiment charts over here. Let's take a look at our sentiment chart. This is showing us what's going on with kind of big money flows, investors. We have red bars. Now, typically, red bars mean we are going to sell off and go into a big move down. So the underlying sentiment, the market is getting dragged higher by the majority, by a handful of big tech stocks and by investors kind of moving in. But big money investors are actually moving out. People are going to safety as the stock market is pushing up to all-time highs. This is a very weird mixed signal. It's not the strongest signal. It is definitely a weird one. We have the same with the NASDAQ. If we take a look at the NASDAQ, very similar type of price action where the sentiment is similar to the S&P 500. NASDAQ's a little more choppy, a little more volatile, but overall that's kind of a really weird signal we have going on. And really we just need to hit some targets here so we can lock in more gains, move our stops up, and protect our positions, just because I don't trust this market. I never trust the market, and that's why we always have a game plan to lock in gains, move our stops up, because anytime you move into the stock market or any asset, your money's at risk. And so that's what we focus on. Let's take a look over at real estate out of curiosity. IYR, haven't looked at this. Nothing too significant there. Let's actually go to utilities. Up 0.5% on Friday. Utilities have really come to life, telling us that money is getting fearful. They're moving into this defensive, no matter what, you're going to need utilities, electricity, running water. We saw this actually just before August. We saw utilities really pop and take off and dramatically outperform the S&P 500. We're kind of seeing that right now again. And that means we could see the market have a hiccup or a sharp pullback at any point. That same time frame, if we look at, say, the S&P 500, you can see that same time frame, the S&P 500 traded sideways and then had a fairly decent hit. And that was a piece of news. I think that was Fed. I can't remember what it was. But more or less, the market had a 3.5%, 3.25% drop very quickly. There was that divergence. The stock market was trading sideways and utilities shot higher. Right now, we are seeing utilities really pick up speed much more to the upside here than the S&P 500, but they are grinding higher. It's just an early warning sign that money is being defensive. And again, that's what that's what these charts are saying right over here, these red bars. Money is defensive and very worried about the stock market collapsing. So let's go take a look at gold. We do have gold. It's had a very nice breakout, a nice run. It has got a nice tight little pennant formation, a little flag here pointing to potentially an explosive move to the upside. It is primed and ready for something, for the Fed to say something, and we see this just shoot higher and take off. We are long gold with a discretionary trade. That is just a bonus side trade beyond our strategy, simply because gold has got this beautiful bull flag, and we're playing this breakout. It has potential to run to about 4,100. It could go way past that, depending, maybe 4,500 an ounce US. But again, right now it is holding in a tight pattern and primed and ready to move higher. If we take a look at silver, very similar type of chart pattern. Actually, we can just go based off this most recent run using a Fibonacci extension and the pullback. This tells us where silver should head to next, which is about 45.25 to the upside. So silver has already started to break out of this tight little pennant range. At this point, it looks like it could run about 6%, potentially even this week. It's already started that run, so we could start to see it pop by leaps and bounds. But again, the Fed's coming out this week. That might hold the market steady. People don't want to commit until they hear what the news is, and that'll create some wild price swings at that point as well. Many of you want me to cover a Bitcoin. I'm not a fan of the Bitcoin chart. It looked really good. It was getting set up for another discretionary trade. We did one in November. It was a 40% return in a very small window. We were getting close, and the chart just didn't give me the setup that I like for a discretionary trade. We didn't put that on we did take it with a ban strategy, the best asset now. If you were playing that strategy, we did hit our first target. We locked in gains, moved out of that. It was a really nice, quick little trade. But overall, right now, it's still not looking the best. Looks like it may have carved out a short-term bottom, but in the grand scheme of things, I'm not a big fan of the chart pattern. If I had to kind of compare where I feel like we are right now, I would say this right here is kind of like this right here. It worries me. I'm not a fan of the price action. If the stock market, depending what the Fed does today, or this week, if the Fed comes out, we could easily see the stock market want to roll over and sell off, and we go into a bigger drop. And of course, we could see gold and things shoot higher, and Bitcoin might get sucked down with the NASDAQ and everything else. So I'm not a big fan of this. It is kind of holding up. Obviously, we've got kind of a rally, a pause, a rally, kind of an ugly pause. And it's trying to figure out what it's going to do. But again, I don't like to trade things that have a really mixed signal. They aren't very clear. So I just, you could still say this is a stair-stepping pattern. This could easily go up. It could. But again, in the grand scheme of things, I don't look for trades, or I don't take trades because I like something and it looks okay. I look for trades that have a clean setup, show strong strength, and then I get into it. And if it doesn't, I just ignore it. So that's the problem when you get in with trading things that you like. You're like, oh, this looks like it's turned a corner. But in the grand scheme of things, it is a pretty messy kind of top, very similar to what this was over here. And I have no problems missing out on gains in different assets that move. No problem with that. It's just a matter of moving into things that are more consistent and have a clean setup. So let's take a quick look at platinum and palladium, just because we haven't covered them in a long time. Overall, quite a bit of damage has been done to the chart. We've seen platinum take a really big hit. It's kind of been moving up in this kind of bearish formation. It did have some pop. It must have been something around news or something, but overall it's moved up into resistance and it's drifting up into this breakdown zone. I'm not a big fan of this chart pattern. It looks like it could easily go back down and test the 150-day. So that it's stalling out a little bit, that precious metal. If we look at palladium, palladium also has had quite a bit of damage done to that chart as well. It rocketed higher, it had a huge hit, and now it's kind of worked itself up into this kind of breakdown zone, into this kind of topping zone through here, and it's kind of being rejected. Gold and silver seem to be the two metals of choice. If we go and we take a look at copper, which isn't a precious metal, but it's kind of similar. You can see it's been hit very hard. It's got a big bearish flag. It's drifting up. So it really comes down to me, that the true precious metals, which are gold and silver, that's what everybody kind of, most people think of when they talk about the precious metal space. So that's kind of where we're at there. So let's take a quick look at small cap stocks, the IWM. I'm kind of all over the place this morning, but in a nutshell, here we've got a previous high. You can see the small caps, they sold off with the tariffs and all of that stuff, big sell-off. Percentage-wise, it was pretty severe, pretty painful for those trading small cap stocks, down 31%. It has been grinding its way higher. Now we're coming up to a potential another top where it could get sold into. Maybe it's going to poke to a nominal new high. That's what the market loves to do. It puts in a high, and then it can run up even for just a day sometimes. Push up and catch all the news, and everybody's saying small caps are, all-time highs. It sucks. The last of the few people in who aren't in, they get FOMO, they're missing out, and then of course it goes the opposite way. And then you can see the volume here, it pretty much shakes everybody else. Most people out who bought up here. It goes from one extreme to the other, feeling like you're missing out to feeling like you're losing your shirt and you can't take it anymore. Well, we're coming back up to potential resistance, and if we zoom out on this chart a little bit, you can see we are back up into nosebleed territory from 2021, where they had this final squeeze where everybody thought we were starting another bull market. Small caps shot higher, people got very aggressive, and then of course it turned into a bloodbath, and the stock market sold off significantly, probably another 30% to the downside. So that is what we need to be aware of. The majority of stocks, the stock market is just poking into resistance areas, the majority of stocks. And that means most things are at resistance. And again, our sentiment chart is showing us big smart money is moving away from the stock market. They're slowly positioning themselves into other asset classes, moving to cash. And so that is a pretty scary sign that we've got going on here. But you don't want to fight this trend. Doesn't mean you short. This market could explode and pop higher. We never know. And so we just have to stick with the positions and manage those trades. Anyways, that's it for now. Take care. Bye-bye.